In my experience, history, I've been through, depending on how you count them, either 3 or 4 precious metals bull market cycles, some fairly short. But they followed a predictable pattern. The market was kicked off by a fear buyer buying physical gold. Gold moved first. After the momentum was established in physical gold, some of the better gold producers began to enjoy better profit margins. There's a delayed reaction to this, of course. But when that happened, the biggest gold producers began to move. And that momentum attracted generalist investors. When the generalist investor became interested in the precious metals narrative, a couple things happened. Going right to your question, perhaps because of the lower unit price of silver, leadership in the precious metals market changed from gold to silver. Silver moved later, but when it moved further and faster. Sorry to keep going back to history, but let's look again at the decade of the 1970s. At the beginning of the period, gold was at $35, price controlled. Silver was at $1.20 or $1.25. At the end of the decade, gold was at $850. Silver was at $50. Let's go back then to 2000. At 2000, gold was at $253. And if my memory serves me well, silver was at $5 or $6. At the end of the decade, gold was at $1,700 and silver was back at $50. When market leadership changes from gold to silver, silver runs further and faster. But it takes longer for it to get started. You may remember, or you may not, I looked at my notes of our last interview, yours and mine, or second to last interview, at the beginning of 2024. And I had suggested to you that the high-quality junior stocks as a whole were really, really, really hated. I love to triumph my past successes on those odd occasions where I was right, and I was really right. And I said, I think that these silver stocks are a coiled spring. Not because I think silver needs to do well over 2024, but rather because everybody who possibly wanted to sell these stocks has already done it. They're hated. And we've seen this weird circumstance in 2024 where the high quality silver juniors are uniformly up 2, 3, 3.5 times, while the silver price hasn't moved much. So I would caution you that it may be that in the next stage of the silver bull market, in the beginning of the market, that silver itself, the metal, might outperform the junior stocks because the high quality juniors have already had such a spectacular run. Looking longer term, again, in my experience, Doug Casey famously points out that the market capitalization of high quality junior silvers is so small. And notice that I say high quality. I'm not talking about the really junky guys. When the generalist investor becomes interested in the space, there isn't enough room. There isn't enough market cap to contain the money. From the point of view of what silver bullion does, which is to say sells silver, you won't need me to tell you when leadership has transitioned from gold to silver. My experience is that when silver runs, you don't need a crystal ball to understand it's running. It really, really, really runs. Is that going to happen in 2025 or 2026? I don't know. What I do know is that when it runs, whether you had to wait 2 years or 3 years, doesn't matter much. You don't have to trust me on this. Just get a silver price chart going back to 1970 and take a look at what happens to the metal when it runs. It is truly, truly, truly astonishing. I think the dollar will do well relative to other currencies, but I think the dollar will do very poorly in isolation. Let's look at the arithmetic around the U.S. 10-year Treasury, Patrick, in answer to your question. The Treasury pays you 4.4%. And if you believe the CPI stated rate of inflation at 2.6, you're getting a 2.2% real yield. Not great, not bad. You know you're going to get paid because if they need to, they can print to pay you. But if you change your inflation assumptions to reflect real arithmetic, what you see then is that the purchasing power of your yield and your principal is declining by 7.5% compounded. Now that's brand new arithmetic. If you take 4.4 as the interest number and you subtract 7.5, the deterioration in the purchasing power, what you learn is that in a real sense, you're losing 3% a year, every year for 10 years. The U.S. government is making you a promise, Patrick. If you lend them $1,000 today in a U.S. 10-year treasury, they will give you back 35% less purchasing power 10 years from now, and they guarantee it. Let's look at history and arithmetic. In the decade of the 1970s, with the U.S. dollar losing 75% of its purchasing power, the gold price went from $35 to $850, a 30-fold increase. Let's strip part of that out, just for fun. Let's say that the move from $35 to $100 was due to the legalization of gold ownership, because gold had been price controlled for 40 years? So let's say at the beginning of the decade, just for fun, that gold was $100 an ounce. At the end of the decade, with a 75% deterioration in the purchasing power of the US dollar, gold was at $850, an 8.5-fold gain. Then let's fast forward to the decade 2000 to 2010. The last time the US dollar was under internal assault. At the beginning of that decade, the gold price was $253. At the end of the decade, the gold price was $1,700, a 7-fold increase. Or, just for fun, let's lengthen the time frame. Let's do 2000 until today. At the beginning of the millennium, gold was at $253 an ounce. Now it's $2,600, $2,700. What's that, an 8-fold increase, 9-fold increase? Gold has done exactly what it was supposed to do for the last 24 years. It has maintained its purchasing power. If I'm right, and the decline in the purchasing power of the US dollar is at 7.5%, it was less earlier, and gold increased in value by 8% compounded over 24 years, what gold did is exactly what it was supposed to do. When people with a short-term orientation, the greed buyers of gold, say, I own it at 27 because I think it can go to 3,200. That number becomes real to them looking at the immediate past. That's not why I own gold. I own gold because I have a visceral memory of the decade of the 1970s when the gold price increased in real terms 8-fold. I own gold not because I hope it'll go to 3,200, but because I'm afraid it's going to go to 9,000 or 10,000. And Patrick, I would dearly love to be wrong.